Okay, hi everyone, welcome back. And in today's update, we are going to check out QNT's chart because in like very short term, something kind of interesting is happening. But before that, we are going to talk about something truly fascinating if you are interested in like the real world side of blockchain. So Gilbert Verdian, the founder and CEO of Quant, dropped a tweet recently that caught my eye. In it, he points out a trend that is kind of hard to ignore. Big names like Deutsche Bank and Robinhood are starting to build their own layer 2 networks on top of public blockchains. And I get it, at first glance that might sound like just another piece of crypto news, but if you just step back a little bit, it's actually a sign of where this whole situation might be heading. See? These institutions aren't really doing it just because it's actually trendy. No, there are many technical reasons. For example, layer 1 blockchains like Ethereum or Bitcoin are absolutely great, but they were built for open, permissionless networks. They weren't really designed to handle enterprise scale demands. For example, things like integrating with a bank's core system, keeping sensitive data private, or maybe even scaling to millions of transactions without really any downtime. And that is exactly the part people usually miss. You see, it's not just about faster transactions or lower fees. No, banks and big tech companies care about enterprise integration, meaning connecting blockchain systems with things like ERPs, compliance tools, and identity frameworks. They also very much care about privacy and control because no bank, and I really mean that, no bank wants its internal transaction data fully visible to the world. So relying on only L1 chains actually limits them. It creates issues like, for example, scalability bottlenecks, security risks from bridges, and gaps in compliance. And let's be honest, these institutions aren't really going to redesign their entire tech stack to fit, for example, into Ethereum. No, they want blockchain to fit into their own world, not necessarily the other way around. Now, this is exactly, in my opinion, where QNT's idea comes in. You see, instead of trying to force layer 1s to do every single thing, why not build on top of them? Quant calls this layer 2.5, aka Overledger Fusion, and it is basically a multi-chain rollup that doesn't just boost speed and scalability like typical layer 2s such as Arbitrum or maybe Optimism. No, Quant's layer 2.5 also adds number 1, native interoperability between multiple blockchains, number 2, enterprise-grade security controls, number 3, compliance features like audit trails and disaster recovery, and number 4, tight integration with existing corporate infrastructure. Think of it kind of like how internet currently is working. The public internet is the backbone, but big companies run private networks, VPN, and security layers on top of it. Quant's vision is kind of similar. Let institutions keep using public blockchains, but let's add at the same time a secure interoperable layer on top where they can do whatever they need to do without really sacrificing privacy or even scalability. And they are calling this new architecture the layer 2.5, and again, aka Quant's Overledger Fusion. Now, at this point, you might be wondering, well, okay, why is all this happening right here, right now? Well, you see, let's look at what has been going on lately. First, Deutsche Bank, one of the biggest names in global banking, has been exploring tokenization and digital asset custody. They are basically looking at how to bring traditional assets, like for example, stocks, bonds, real estate, so on and so forth on chain, so they can trade it faster, settle instantly, and open up new revenue stream. And it is exactly about that word, revenue. And there's also some other companies like Robinhood, which is reportedly building or integrating at least a layer 2 solution to make the crypto side faster and potentially much cheaper. That is kind of a big deal because Robinhood serves millions of retail users and speed plus low fees really matter to them. These are not really just test pilots anymore. No, it actually shows that institutions are actually getting ready to move from playing around with the blockchain in the lab to actually putting real money in real systems on chain. And Gilbert Verdian points it very clear. The momentum is here, but these institutions want to do it on their own terms. They are not willing to compromise on some things, including, for example, number one, enterprise level security, number two, privacy of customer data, and number three, deep integration with their already existing systems. Basically, they want blockchain that fits into what they are already doing, not something that forces them into changing every single thing. Now, let's talk about Quant's role here, because that is actually kind of unique. You see, they are not really trying to launch yet another L1 blockchain to compete with something like Ethereum or Bitcoin. Absolutely not. They are also not trying to be just another layer 2 that only makes one single chain faster and potentially cheaper. No, instead, Quant's strategy is to build something that they call layer 2.5, and it is like a layer that does a couple of things. Number one, it actually sits on top of L1 blockchains. Number two, connects multiple chains together natively. And three, adds serious security and compliance tools that enterprises actually really need. And what is the cool part about that? You see, they are using something called Overledger, and it is basically an operating system that lets banks, payment companies, and other big players integrate their systems with multiple blockchains at once without really having to re-engineer every single thing from scratch. So rather than picking just one chain and be stuck with its limitations, institutions now can use Quant Fusion to work with any, and I really mean that, any L1 that they need, switch between them, and keep everything secure and compliant. In a way, Fusion becomes the real backbone that could potentially power things like tokenized payments, digital bonds, or even cross-border transfers, all without losing the skill and control that big organizations actually demand. So what does all of this really mean for QNT? Honestly, it feels like we are finally entering the enterprise adoption phase of the blockchain, and we are finally moving away from beyond just DeFi, NFTs, and some small retail trading. Institutions like banks, payment companies, and even possibly governments aren't just chasing faster transaction speeds. No, what they do really care about is three things. One, trust. Two, compliance. And three, integration into systems that they are already using. And that, my friends, is exactly where layer 2.5's approach fits in so perfectly. Instead of being yet another single chain solution, Quant Fusion offer exactly what these big players really need. Interoperability across multiple blockchains, enterprise-grade security so they can protect sensitive data, also compliance tools that let them tick all the regulatory boxes, and scalability to serve millions and millions of customers without really a whole lot of downtime. And if you zoom out, it's actually very much clear where this industry at the moment is heading. We are likely going to have more and more hybrid models, secure enterprise networks that run on top of public blockchains rather than isolated private blockchains that are simply not able to tap into larger crypto ecosystem. And that is kind of a big deal because it means institutions won't have to choose between public and private blockchains. No, in this scenario, they can have the best of both worlds with the help of layer 2.5 designed by QNT. Now, here is the interesting part. Gilbert's Verdian tweet isn't necessarily just another announcing new tech. No, it's actually describing a real paradigm shift. Number one, from purely public crypto projects that most serve retail to institutionally integrated, compliant, and interoperable networks. Number two, from risky bridges and silos chains to multiple chain rollups that are absolutely built to handle large-scale operations safely. And three, from speculation and hype to actual enterprise adoption where real money, assets, and data flow through blockchains. And Gilbert Verdian pretty much summed it up perfectly. He said it is no longer a question of if, it is only a matter of when. So, as final thoughts, when you combine all this, meaning the strong fundamentals, the clear production vision, the technical architecture, and this whole new wave of institutional interest, it's actually pretty reasonable, in my opinion, to argue with fundamentals this solid and so many signs actually lining up, we can definitely expect a very strong bull run for QNT in this coming alt season. And I think also on the live chart, we are having every single sign when it comes to technical analysis and specifically my field of work's Elliott waves indicating that we are actually primed for some major price explosions. Now, having said all that, let's go on the live chart and see what is happening in the short and then also mid to long term, because I think we are actually seeing some beautiful looking price action. Okay, here we are. And if you remember the last time that we talked about QNT's chart, I think we were right around these areas, and the idea was that this move is hopefully going to continue a little bit more, but thereafter it, if we get a move on the downside, it's not going to be a bearish sign at all. Why? Because at that point we are still absolutely 100% able to find off of the lowest low a 1 2 3 4 5 wave up, which means probably the final low in QNT is already in, and this is going to be just a beautiful looking bullish setup, because we can have a move down, sure, but odds are that move is going to be like very slow and choppy in form of a correction, and well, on a higher degree, maybe this is a wave 1, this is a correction for wave 2, and what's next? A massive move up into wave 3 and 4 and 5, and since wave 3 is usually the biggest wave, then okay, makes perfect sense to argue that this is going to get quite extended in QNT. But if you remember, also in the previous update, we talked about a very important point, and it was this: if we want to go up in quant and we want to at the same time argue that this is a 1 2 3 4 5 wave impulsive structure, then okay, we shouldn't really go any more higher than, I think it was about $120. Why is that? Because if we do go above 120, at that point, this supposedly wave 3 is going to be the smallest wave, which is a huge no-no in Elliott's waves. So what happened? We did continue this move up a bit more, but now we are getting some sort of a correction structure. But before we talk about what might be the shape of the next move, let's just answer this question. What if we do get a move on the upside and go possibly above 120? At that point, I think we need to consider maybe and hopefully the extension scenario. You see, let's go on a less busy chart, maybe from, excuse me, no, this, there we go. Okay, so at that point, you are going to see me saying that this is probably, instead of a wave 3, it's actually a wave 1 correction for wave 2, and this can be 1 2 3 4 5 wave up into wave 3 correction for 4, another move into wave 5, and basically we are having an extension structure, which is going to be, you probably know the answer, into a larger degree wave 3 correction for 4, another move on the upside into wave 5. If we do go above 120, that means we are very likely to have this possibility right in here in quant, which is fantastic. And again, once more, you want to remember, if around these areas we get a decent move down, it's not going to be a bearish sign at all. If anything, it's actually going to be a beautiful looking buy opportunity. Now, what if this is already a 1 2 3 4 5, and now it's time for a correction structure down? At what point can we exactly say that, okay, the end of our wave 5 is in here, and now we are having this corrective movement? I'm gonna say this: you need to pay full attention to this important low down here, about, let's say, $104. Why is that? Because if we do go down even in a slow manner and take this important low at that point, okay, that is going to confirm that we have already completed a 5 wave up, and then this is going to be a correction down, and hopefully the next move is going to be a massive one on the upside. The point that I'm trying to make in today's update about quant is this: I think right now we are absolutely on the bullish track, and there is simply not a whole lot to be worried about. And sure, maybe we are going to get a move down, but the move down itself is not really that important. Honestly, it is kind of predictable. What really matters is the shape of the move. What you do not want to see is a very strong one, a 1 2 3 4 5, without a whole lot of overlapping of the waves in order to go down and reach to about these levels. On the other hand, what you want to see is a very slow and choppy move, which means we are constantly having overlapping of the waves between our pullbacks up. And if we get this thing, it will be, from my POV, an extremely bullish sign, suggesting that, okay, this is a fantastic setup for a beautiful looking bull run, hopefully in the future. And Also, in terms of fundamentals, we are talking about it in every single video. I think we have all the right reasons to believe that QNT is a fantastic project and it does have a very, very bright future. And when it comes to technical analysis and specifically Elliott waves, let's just hide everything and put the chart on logarithmic. Let's zoom in more. There we go. As you can see, this is almost a 4-year long-term consolidation pattern, and we have basically seen the price compressing big time. Now, these types of price actions usually lead to unbelievable price explosions on the upside, and I think a clear-cut example of that is XRP. In Ripple, we had about a 7-year correction structure. It was very, very similar to what we are having at the moment in QNT. And what happened? That led to about a 750% move up in only about 40 days. And if something similar is going to happen right now, then okay, it means we can have about like a $900 to potentially even $1,000 QNT. And I do think that's actually very much realistic and not just some moon targets. No, I think a $1,000 quant is very much in the cards, but whether we are going to go, for example, maybe to 5 to even 10K, okay, that can be up for debate. The point that I'm trying to make is this: in the mid to long term, in terms of technical analysis and also fundamentals at the same time, we are having all the right reasons to believe that QNT in this cycle is going to be a huge winner. And I hope I explained everything well and you understood what is going on in Quant. Anyway, if you found any value in my content, I would really appreciate if you like this video and consider subscribing to my channel and follow me on Twitter. And if you want more, maybe you want a complete analysis for your own specific crypto, or maybe you want to learn some decent TA in order to be able to make good money in the markets, you can become a member and ask me anything you want. And until the next update, I hope you have a wonderful time with your family and loved ones. Goodbye.